Okay, salam everyone. My name is Nicholas, founder and CEO of Loan Panda. So right now we have a new program called Ask Loan Panda. We will read your DM and email and give advice on how to settle debt issue and safety leveraging strategy. Today we'll be reading one of our first email we received 3 days ago. So sorry for the late reply. Okay, hi Loan Panda. Thanks for the wonderful banking knowledge you guys have been sharing so far. Keep it up and share more good content to help people like me to understand more about Malaysia finance. I have an inquiry on my personal financing where I'm not sure what to do on my next step. I'm age 28, currently working in Johor Bahru with a gross income of 5,000 per month. I have a saving about 50,000 and was planning to purchase my first landed house in JB area, selling price at 430,000 for own stay purpose. Due going to marry next year. But things didn't go well because just last month my family member fall sick and admitted to the hospital without insurance coverage. Since I'm the only kid in the family, no choice but have to take out 30,000 in cash to settle the medical bill. I have paid 20,000 in cash and remaining using my credit card monthly installment. My current commitment per month is a car loan paying 638 per month, finishing paying in the next 12 months, and PTPTN 240 per month, and the outstanding credit card is about 10,000. I'm seeking an advice whether I should continue buying the house or you have any other advice for me because I wouldn't want to get into a trap in the race rat, working so hard just to repay the mortgage. Thank you in advance and hope you have a great day. Okay, thank you so much for the DM and really appreciate that you write so detailed to us. And first of all, I would like to feel so sorry about the tragedy happened on you and your family, and hopefully everything is go well and getting better. Meanwhile, would also like to give you a thumbs up at the age of 28 and have accumulated 50,000 saving. You have outperformed 90% of the Malaysian. Meanwhile, if you're working in Johor Bahru, income at 5K, I would say consider as medium to medium high if you're not working in Singapore. So addressing to your question, whether or not should buy a 430,000 house, my answer is a yes or no. It really depends. Okay, why do I say so? People always say, buy property good ma. If you're buying for own stay, is a liability. It takes money away from your pocket. So a rule of thumb of comfortable housing affordability is 30% of your gross income. So if let's say your gross income is 5,000 as you mentioned, 30,000 would be 1,500. So this is just the installment amount, not including your other expenses like your cukai harta, cukai tanah, maintenance of the house. Okay, so if add up all out, would be around 35 to 40% of your monthly income. So if you're buying a 430,000 property, if you borrow from the bank 90,000, so the monthly installment would be 1,800 per month. So let's say you have 30,000 cash on hand, and then I'm not recommending you to all in all your money inside this deal. Why? Because if anything happens in future again, so you do not have any backup cash on hand, so not recommend. So if according to calculation, my advice was not to purchase a property for own stay. But you have numerous reasons. For example, you need to marry, then your wife don't want to stay with your family member, then this is your choice lah. Okay, but if that's the case, you need to have a partner with income, so then your household income will increase and maybe you guys can afford it lah. Okay, so this is for purchasing the whether or not to purchase the property, and according to calculation that is a no. Okay, so my advice would be, since you are a single kid where you have to support two parents in the future, so maybe you have to contribute 500 to 1,000 per month for them, okay, just to support their lifestyle. Okay, so this is one of the thing lah. Okay, so it will be very struggle if your income do not have any increment, okay, in the next few years. Okay, but instead of buying a property, stay with your parents and pay rent to them. Okay, why? Because since you have to contribute the income to them, so why not you just pay as a rent to them and stay with them, so they will have the income. Okay, then they can afford themselves. Meanwhile, you will have a place to stay at a much cheaper price. Okay, so for example, yes, even you calculate, if I buy this property 430,000, I'm paying 1,200 per month for serving the interest, then the property will increase in price from time to time. Okay, but one of the main goal for this is to have a proper cash flow management. Because you think about it, if you purchase this property, you have a commitment of 1,800 just for the mortgage, okay, not including any other related expenses to this property. So you have this commitment, and this commitment will follow with you for the next 35 years. So by paying rent to your parents, they have income for their living expenses, and you have a place to stay. Meanwhile, what you should do is to buy investment property. Why do I say so? Because buying investment property, your tenant help you to build your equity for the property. So meaning to say, they're helping you to pay for your mortgage. Okay. So by looking deals ranging about 250,000 to 200,000, okay, in Johor Bahru, I think is achievable because I'm living at Johor Bahru as well. Okay. So looking for this, and then buy 4 to 5 property depending on your retirement goal. Okay. So how to calculate the retirement goal? It's easy to calculate. What's your desired living expenses per month at current money? Okay, example 7,000. And what's the average rental price for property of 250,000 to 200,000? So let's say the average rental for a 250 to 200,000 property, right? The rental rate is 1,200. So by owning 6 clean title property will help you to have a monthly cash inflow of 7,200. So with this cash inflow, you will able to retire comfortably in the future lah. So if you didn't spend more lah. Okay. So then the next $1,000,000 question will be, how am I going to afford such a big loan amount because my income is just only 5,000? Okay, this will be very depending. So if you wish to know more, we can talk privately, as we need to check on your income document. But generally is to declare rent collected from your property into your income tax. So adding your rental income to prove it to the bank that you have such income. So every paper document you have to do it properly lah. So actually there are lots of good deals around in JB area. So you need to do your homework, finding property that have 5 to 6% rental yield. Okay, let your tenant to help you to build the property equity. So let's say if you have 7 property at 250,000, so each total financing from the bank would be close to 1.75 million. So every rental paid from your tenants, do not cash out. Even have positive cash flow, you don't take the money out. You just take, let's say you have your positive cash flow of 100 to 200. Why take it out? Taking 100 to 200 wouldn't make your life getting better. So instead, just keeping inside to build more equity to pay off your mortgage even faster. So at the end of 20 to 25 years, depending on your interest rate, you will have 7 clean title property and generating to you 8,400 per month. Okay, to you. So not including the inflation and rental increase. So, but please bear in mind that you need to stand by minimum 6 months, or comfortably you have 12 months of installment on your liquid cash account, just in case of any bad event happen like what you have recently experienced. Okay, you need to get your risk control. Most of the people get bankruptcy is they tend to over leverage with zero backup. So when something bad happen like what you have experienced, they do not have additional cash flow to go through it. Leverage with a safety net is very, very important. The main idea of property investment leveraging is not to win big, but to win long. Then the rest would be, don't buy car unless your car is giving you lots of problem. The most comfortable car to drive is car without installment. You do not have to worry about the monthly repayment, and it's a liability that taking money out from your pocket every month. And for the PTPTN, it's a good uncollateral loan with low interest and long repayment period. So it's best that you keep it and then you make sure you make the payment. Okay. But for credit card, my advice will be pay in full, as high credit card utilization will affect your bank score and consume in high interest. So hopefully my advice would help you on making the decision of whether or not to buy. The main goal is to build more asset to put money into your pocket instead of buying liability take money out from your pocket. So this is what we highly recommend people to do. So first, not to over leverage, but leverage with a safety net. Okay. So if you guys need to have such advice, you can click the link at the comment section below. Okay. And then submit your situation to us. Okay. Then we will randomly pick and create into content for review anonymously. So that's it for today. See you guys on the next Ask Loan Panda session. Thank you.